Hello, my name is Raitis and welcome back to another weekly outlook. In this video, I will show you how to use seasonal tendencies and the open interest to anticipate long-term reversals and frame a long-term bias in the marketplace. Before we get into the video, feel free to join my Discord channel in the link in the description below this video. You can see we ended last week off with a nice winner on YM futures. We took the long and the analysis played out wonderfully. So you can expect weekly outlooks, commentaries, and also trade ideas for New York or London close session in the Discord channel. But now let's start off with the weekly outlook. As usual, we start off with DXY. You can see we have a new monthly candle. We're going into the trading month of March, the last month of the first quarter of the year 2025. And what can we see? We have our monthly PD arrays outlined. I won't go over every PD array. On the weekly time frame, you can see we're selling off from this bearish order block coupled with the mean threshold of this weekly inversion fair value gap. And we could see DXY run back below previous week's low, but we will get into the Y later. We have all the weekly PD arrays outlined. It seems a little bit clustered, but I hope you can see through the lines. It's just helping me to determine lower time frame displacement in from the lower time frames. On the daily, we traded back into this SIBI right here and ran out buy side liquidity. You can see Wednesday, Thursday, Friday last week where we saw a pretty massive rally back above the high into a premium, which is this daily bearish order block right at the end of the month. And as you know, and as you have learned, the monthly candle forms, we trade lower. So for that, we have a bearish candle. Let me draw this out to you, just the power of free example. So we have that here. Let's remove this line. So monthly candle forms, a bearish candle. It opens, creates the high, trades into a premium, creates a wick. Right here, it's not centered, but now. Then we trade lower into a discount and market starts to distribute orders. And then we get a wick to the downside and then the candle pulls back. So this is how a typical monthly candle would form. And I think the run higher was only the distribution of shorts from a key discount level. So this is basically only manipulation to set us up for another rally lower, in my opinion. Now we get into the seasonal tendencies. As I promised you, you can see I have the seasonality for the dollar index, the 30-year seasonality, and you can see we form a high at the start of March, at the beginning of March, and then create a low mid-March. Now let's look at other different seasonal tendencies. Let's see how far back we can go. Now this wouldn't apply for a really long-term seasonal tendency. We would only form a high in April, but for short-term seasonality, you can see DXY sees a consolidation. Now let's check out the 5-year. For the 5-year, it's actually bullish, but you can see we see some initial decline or consolidation at the start of March. Now let me get back to the 30-year. Let's try 35 one more time. Okay. But you can see on the 30-year seasonal tendencies, we usually get a drop going into March, middle of March. And this is what I anticipate basically going into this trading month. if we are bearish, I want to see the market close below 50% of this daily busy right here. This would invalidate this as a discount PDRA. So we have one right here. And if the market closes above the consequent encroachment, this would be very good for shorts. I mean, we could see a potential trade today because we're forming a swing high, and we have also some medium and high impact news releases. That's why usually I don't trade Mondays, but coupled with that we are forming a swing high in the marketplace and we have some news on Monday, this is a viable session to trade. Now, DXY could still rally higher from here. This could be a break in structure above the high, market trades into the busy, closes higher, and then rallies again, and to take out the daily rejection block, which would be a short-term draw on liquidity if we're bearish, and if we're bullish, sorry, and if we're bearish, we would target this daily discount rejection block right here. So it would be a clean target, and of course this low as a first target objective. Now, why do I believe that DXY is bullish? You can see Wednesday, Thursday, Friday of last week were bullish up close candles, while 10-year T-note futures saw a bullish candle, which is not in line with normal market symmetry. Thursday saw a bearish candle, which is normal market symmetry, and then Friday, as DXY was bullish, T-note futures were as well bullish, which is not good. We don't want to see dollar trade lower and higher while T-note futures are rallying as well. T-note futures could be inside a consolidation, but we don't want to see them rally while dollar is rallying at the same time. So that's why I think this was only a manipulation to seek more discount in the future. Now, from today's trading session, what's going on here? We are seeing a decline in T-bonds as well as in dollar, which is for now not good. Now, what is wrong with TradingView today? So I don't know what's going on, but let me, where we have the, okay, it doesn't show the session breaks. I really don't know what's going on with TradingView. It's lagging a little bit, but you can see DXY is selling off from the weekly new week opening gap. That's great to see. We have this busy right here. We want to definitely see market close below the 50% to invalidate this. This could be a market maker sell model right here. Initial consolidation, accumulation, smart money reversal into a drawn until liquidity pool, distribution, smart money reversal, first distribution, then we would see maybe somewhere here another consolidation and distribution to take price down into the sell side liquidity. So this could be a potential scenario for today. Let's see. Now, I really don't know why TradingView is bugging today, but we could see a rally higher. If DXY is bearish, T-note futures should be bullish. We could see a rally from this daily order block coupled with the monthly order block mean threshold, which is this candle. We could invert this premium array into a discount array and trade higher. Now, euro, if we're bearish on dollar, we should see potential upside on euro, USD. We have the daily fair value gap CB, and we're definitely above the consequent encroachment, and we could see a final push higher. So again, but this looks like a retail head and shoulders pattern, which is not what we like, but we're seeing vicious displacement higher. Now, we could see some form of accumulation at this level and to take it long to run out the buy side liquidity. So the exact opposite scenario for the XY. GBP USD, let's look at Euro GBP, but I think Euro GBP USD should be the leader. So if you want to take longs, GBP USD should be the pair to go. Now we have to check for overextension if you want to take trades, because London session rallied massively. Again, USD CAD, not the ideal pair to trade because DXY is bearish and we've seen fundamental strength on USD CAD. USD JPY, also not a good trade in my opinion. Or wait, actually. But today we're seeing a bullish up close candle while DXY is bearish. That's why not ideal, but USD CHF could be the ideal short because we didn't break the swing high right here on the daily chart while DXY did. And we could sell off from this bearish order block coupled with the fair value gap. So let's see how this plays out, but this could be also a potential short scenario. I think on the 1 hour time frame we could see a market maker model right here and then distribution back into the original consolidation. Euro GBP should be bearish, Euro weak, pound strong, and we definitely could reach back down into the rejection block of this low right here on the daily. So let me line this out. This will be our target daily rejection block right here. We could sell off. So this is probably a breaker. Market runs high right here. So we could see a run lower from here, or we could revisit this fair value gap right here to then sell off. But for longs, we choose GBP USD because Euro GBP is fundamentally weak. So we have a weak Euro and a strong pound. Now let's get into the indices. I'm planning to take a trade today because my expectations are aligned or are being met from what I'm seeing right now. We have the monthly PD arrays. I think that's clear. Nothing really changed right here. You can see and copy them if you need. On the weekly chart, you can see we saw a massive run lower last week, Monday going to Thursday, and then Friday saw a TGIF profile after we ran the sell side liquidity below this initial D ring range low, not the low, but the rejection block. But we still ran out the majority of the sell side liquidity. And now I just expect this being a swing low for the market to trade back into the range, maybe back to the extreme premium range high. And this is my anticipation. I like that we rallying higher from the weekly order block mean threshold. My daily target objective would be this day, or short-term drawn liquidity would be this daily fair value gap and this swing high, of course. Because right now we're looking at ES. Let me look at the 4-hour chart. Now, we shouldn't close today above, below the BISI right here, so below the 50% of the BISI. And yeah, you can see we opened and started to rally higher from this weekly order block mean threshold. We are at the monthly order block high, so market could distribute because this is a month we didn't really reach quite up into that, but market could run back below this low, and this could be very tricky. So we have to watch out for that. Now Nasdaq. NQ, yes, you can see the monthly levels, weekly levels. We ran out sell side as well Friday. Saw a bullish candle, anticipating this being a swing low. We gapped higher, and I want to see the market close this daily bearish fair value gap if we're bullish. So we have a 4-hour order block. I don't want to see the market really, I mean, this is not a, so we have a busy right here on the 1-hour time frame. I don't want to see the market close below the 50%. So this is the criteria. Let me draw this as my invalidation line right here. Let's make it a little bit thicker in blue, like this. Perfect. So this would be my invalidation criteria. I don't want to see the market close on a closing basis below this line, as well as for yes, right here. Because then market will very likely attack sell side again with the relative equal lows right here. But this is a high resistance liquidity run. We have a stop run and a consolidation going on here. So I really like the highs right here. This is basically a high resistance liquidity run, but I think we could easily get above this high, and above that we have the daily fair value gap, which is resting right above. So I think this could be a nice trade. I mean, we could see some bullish displacement from here again. So this is a propulsion block, but this is too tight of a stop loss. Market could trade back into the inefficiencies, and this risk to reward is not too beautiful, which I don't like. You can see this would be a much better trade with a 3-to-1 risk to reward ratio, and I think we could really see a trade. I would like to see divergence with NQ or YM. For NQ, we could aim for this order block and take this trade, but we have to determine the leadership asset. And then for NQ, I would target the monthly order block, and this would be an amazing trade. Nearly a it's a 3.6 risk to reward ratio. YM, I really don't like the, because YM is really at the monthly order block high. It could distribute heavily from here. I really like NQ because we're not at a premium array. The next premium array is only up here, and we don't really have a high resistance liquidity run. So we could easily run above these highs and above this high as well. So really like NQ, I could really see some longs from here, and this is my analysis. Now we have some news, high impact and medium impact news release for the start of London close. That's why I am considering to trade. If there were no medium or high impact news releases today, then we wouldn't trade, but we have the anticipation of a swing low forming in the marketplace in direction of higher time frame order flow. We have a consolidation, but we're at extreme discount of the range of the initial dealing range. That's why I consider this a viable market profile to trade in. And we have a news release for Monday, which could bring volatility into the market. And that's why this is a good day for me to trade. Now, I said I will also mention open interest. Now, let me quickly go to the euro futures chart. And let me give you insights into my fundamental analysis. So you can see open interest had a massive drop. If we go over already on the weekly time frame, we saw a massive drop in open interest right here. And you can see the commitment of traders report has never been so net long as in the last 3 years, basically, and 2-3 years. Let me look at the time frame. If we go to the 3-year, you can see we have never been so net long as in the past 3 years on the euro futures. So I think euro USD could be bullish, and we saw a massive drop in open interest as we traded into the weekly SIBI. and open interest is starting to rise again, which could indicate institutional sponsorship of a bullish trend. We have to see and confirm this with technical analysis if the market shows us, but we're selling off on DXY from this new week opening gap, and I think this is a really strong confirmation, and we could really attack all the sell side. This is a high resistance liquidity run, by the way, so it will be pretty hard to get through, but we have NFP this week. So with that said, I hope you enjoyed the weekly outlook, and we will see us in the evening commentary today in the evening. Stay safe, trade safe. Bye bye.